There we go. Call to order the February 5th meeting of the City of Belvedere Finance Committee meeting. Can we take a roll call?
Chair McCaskill.
Here.
John Wilton.
Here.
David Walker.
Here.
Patrick Fader. Will Lyon.
Here.
Sally Wilkinson.
Present.
Mayor Peter Mark. And we have Robert Zadnick, City Manager, and myself, Helga Cotter, Director of Administrative Services.
Great, thank you. First item of business is to approve the minutes of two of our previous meetings, November 16th and December 14th. Are there any changes, additions, or suggestions from any of the committee for those minutes? And if none, is there a motion that we
So move.
pass both of them? Yes. Is there a second? Roll call?
Chair McCaskill.
Yes.
John Wilton. David Walker.
Aye.
Patrick Fader.
Yes.
And Will Lyon.
Yes.
Thank you. Second item, discussion and possible action on the mid-year budget review. Helga, are you going to present? Okay.
Yeah. So thank you, Chair McCaskill and committee. The first item before you today is the 23-24 mid-year budget review, focusing on the general fund up to December 31st. I'll just give a brief overview. Revenues and expenditures are on target for this point in the fiscal year. The actual beginning fund balance on June 30th, 2023 was 5.54 million, which is an increase of 830,000 over the adopted budget amount of 471 million. Revenues are at 57% of budget, and property taxes are on track to meet projections. It is also worth noting that some over-the-counter revenues, such as business licenses and design review fees, are slightly higher than in the same period last year. On the other hand, expenditures are at 47% of the budget, with the city's core departments spending about 44% of the annual budget, which is below the 50% point for the fiscal year. And although capital expenditures are only at about 24% of the budget, it is worth mentioning that projects are usually implemented in the spring when the weather is better. And therefore, revenues and expenditures are tracking closely to budgeted amounts, and we don't expect any significant variances. And the estimated general fund reserve balance of 4.57 million does meet the city's reserve policy goal. And with that, I would be happy to take any questions.
Questions from the committee?
I have a question on the, just the definition of a revised budget, November 13, 2023. Is that simply adding in the prior fiscal year's unspent capital budget?
Yes, that's what that was.
Solely, yeah, thank you.
On the liabilities. What happened with the fire fund and the, this amount that we haven't paid because they haven't charged us, and it's in this weird account. I just can't remember. And were we going to account for that as a liability? What's happening with all that? I just can't remember what.
So it's not in a separate account, but I'll let Sally.
Yeah.
I mean, you're correct, because we sort of talked about whether we should bring that on balance sheet,
Right.
and we have not done that here. So we forgot. But also, yes, it's sitting technically with Tiburon Fire Protection District right now, and they've assigned it to us effectively, but we haven't paid it. So that's something that we maybe should find out whether we should be bringing that on balance sheet or not, because
Okay.
I think we need to talk to the tax auditor professionals to find out
Okay.
how that is reflected, because as we've discussed before, it's not technically
Right.
a liability for us. So I think we should maybe just
Yeah.
review that. And I guess the question then is, if it is something we can bring on balance sheet, is the committee's decision that we should do that. I guess that's the
Right.
thing, that's
I'm
the
not
thing we
sure
need to know.
why, if the accounting principles don't require it, is there a reason why we would want to put it on our balance sheet?
No, I think the only reason was, is that if they choose to charge us it, it's an unexpected expense, right?
Correct.
And I
But
was looking
I-
at this, I mean, it looks very good, very positive, the budget. It looks like we probably will end up with more surplus than, I mean, just looking at it. Then I was thinking about the fire thing and then knowing that we have a problem there. So I was just trying to get a bit ahead of it. But I agree with you, you don't have to bring it on, but when I was looking at liabilities, I wondered what happened to it.
I'll check with the auditor
Yeah.
and then let the committee know.
Yeah, I mean, and the thing I would say about the budget, at least from my experience, it always tracks a bit better in the first half of the year. And then normally we have some unanticipated expenses and then we have all this capital expenditure in the second half of the year. So it normally comes sort of evens out in the second half of the year. But didn't we ask Tiburon Fire Protection District next year to bill us for the entire remaining amount so that we make ourselves whole on that? Wasn't that where we left it?
I don't believe so.
Oh, okay. So I
I
guess
can double check.
let's
with-
just find out what the number is and see when we want to basically pay that bill.
Okay, I'll check with Tiburon Fire.
Yeah, the reason I thought it might end up better was that the property transfer tax is higher due to increased home sales. And then it says probably this will end up having an effect on baseline property tax values next year. So I was just sort of thinking that maybe we're going to end up with a slightly bigger surplus than we're projecting, but maybe not.
That would be for next fiscal year.
Right, would it? Yeah, not this year.
Yeah.
Okay, that's all I had.
The questions, Peter?
Yeah, but this is to Sally's question about the where things track. Do you always look at it sort of as a percentage of budget? Because you have your actual, would you have a year to date from the prior year? Wouldn't that track sort of consistently? Or has it been fairly linear? You indicated that it's not fairly linear.
There's definitely seasonality to it, which is standardized, and then there's just every year there's some shocks.
Yeah.
So it's,
But if we do a mid-year review every year,
yeah,
would it make sense to look at prior year's actuals?
you could do both.
Because-
I could do
because
both.
It would tend to
Yeah,
mitigate that.
the report,
Because the percentage of budget isn't so relevant if it's not linear.
right, the report I can run out of the system does give me the amount from last year too.
Other questions or comments? According to the last page, Helga, you would like the Finance Committee to recommend that the City Council accept the 23-24 mid-year budget review. Can
Correct.
I have such a motion?
So move.
Is there a second?
Second.
Take a roll call, Helga?
Chair McCaskill,
And just for the record, I'm not seeing any public comment on the attendee side.
Oh, thank you. Yes.
David Walker,
Aye.
Will Lyon,
Yes.
John Wilton.
Yep.
And Patrick Fader.
Yes.
Okay, item 3, discussion and possible action regarding the change in investments of reserves and administrative policy manual, section 2.5. Helga?
The second item today is the proposed changes to the investment strategy for our reserve fund balances. Currently, the city invests its available cash in the local agency investment pool, or LAIF, which is managed by the treasurer of the state of California. The city maintains fund balances between 5 to 10 million, which includes current year operating funds as well as various reserve funds. These funds are available on demand and interest is delivered quarterly. However, to maximize the current market interest rates, as directed at the last Finance Committee meeting, staff and members of the committee explored an alternative investment option that could potentially yield higher returns. This option is the Investment Trust of California, or CalTrust, which is a joint powers authority established in 2005. CalTrust offers three types of funds: a liquidity fund, a short-term fund, and a medium-term fund. Any public agency can participate in the trust and investment funds without joining the JPA. CalTrust invests in fixed income securities that are eligible for investment under Government Code 53601 and 53635. Investments are managed by State Street Global Advisors. There are no minimum or maximum required investment amounts, unlimited transactions, and no transaction costs. Interest is allocated monthly. CalTrust provides an alternative option to investing public funds that meet the objectives of the investment policy with higher investment returns, safety, and liquidity. CalTrust provides a higher return in their liquidity fund due to it being more actively managed, quicker to respond to market changes, and shorter duration of investments with 60 days compared to LAIF's 300 days. However, a change to CalTrust would require a more active management of investment choices by staff and the Finance Committee in deciding how to allocate fund balances between the three funds. There are 4 separate recommendations for your consideration as noted in the staff report, and I'm happy to read those. Also included in your packet is a draft of the proposed revisions to the investment policy for your review. And with that, I'd be happy to take any questions.
Will, were you going to give us some additional background?
Happy to. Just to rewind the clock a little bit, if everybody remembers, the origin of this was back in March of last year when there was a regional banking crisis. And the first, operation at that point was make sure assets are held at a safe bank. And so with that, we really looked at West America Bank and made sure that we're holding there the cap of dollars matching the FDIC limit or below. So all cash, which is operating cash at that bank, is below the FDIC limits. And so I think we can put a check mark by safety. Then in terms of trying to drive more return, it became very clear that LAIF was under earning in terms of interest. So then we, with Helga's help, looked at a range of options, and CalTrust seemed like a good fit. Helga knowing some folks who work with them. I'll mention a couple cities. Beverly Hills, Palm Springs, and interestingly, Sacramento actually has their money with CalTrust. So we had a call with CalTrust, and what I would really emphasize is this is sort of non-intuitive, where we can actually get higher interest, but have arguably a safer pool of assets. That was one question that we discussed last time. This is a AAA rated pool of assets here. Really, the biggest distinction is what Helga mentioned, is moving the maturity to like 60 days or whatever it is from 300 days, because we're in this strange environment where there's an inverted yield curve. So you actually earn less going out the yield curve. That will change for us at some point in time, which is the reason for the measure to, take a little bit more of an active approach. And I can envision, once the Federal Reserve starts cutting short-term interest rates, we may want to extend out that maturity a little bit. I think keeping a option open with LAIF is smart and operationally keeps it very easy. But just penciling out some rough numbers, my recollection from the conversations we had was the cash balance that we're talking about moving to CalTrust is ballpark like $8 million. And there's a spread there between the liquidity fund and LAIF of 1.6%. So you apply that to $8 million, and that's a free $128,000, really, for taking no excess risk and shortening up maturity. So it seems like a, prudent thing to do.
Questions?
I had some, one related to expenses and then the other related to what I think is the proposition here is that we go all in one fund, the short-term one.
Mhm.
Yeah. So on expenses, I'm assuming the results that are in the tables are net of expenses.
They are,
Yeah.
yep.
And the other thing is the lay of, I don't get an idea what the expenses are. It just says it can't exceed 5% of quarterly earnings. And then the ones on the Cal Trust are expressed as basis points. So I was trying to compare what the expenses are for the two different instruments, different funds. And then.
I'm not sure I know offhand what LAIF's fees are. Do you recall?
Well, I tell you what, Helga, it doesn't really matter as long as the tables are net. They are. Yeah, it'd be interesting to know because I can't compare them from the note.
Yeah,
One's expressed in one thing and the other's just, there's a maximum. So I just don't know how much they charge to run the funds.
yeah, and on their statements, it doesn't usually say like what the basis points is,
Okay.
so.
Leif doesn't tell you.
Yeah, Leif doesn't.
No.
They just state that their admin fees can't exceed
Yeah,
5%.
that's it. It's not very useful, is it? Yeah, no, I'm assuming that Cal Trust is lower, but I'm just assuming it is. But anyway, as long as the results are net, then.
They are
you
net.
know, Yeah.
Yeah.
And then there's a difference between what's in the summary and then what's in the annex on Cal Trust fees. That they're not the same.
Right, the fees that I listed in the report were based on an email I got from CalTrust. I took it from there, so.
Oh,
those-
they're not the
they-
same. as
They're a
in the
little
an-
different, they're a little
Yeah, a little
different, yeah,
different. Okay, that's the reason.
right.
Okay.
Yeah.
So that's fine. And then the only other one would be, as I read this note, you're recommending putting it all in the liquidity fund. And as you rightly put it, given the yield curve, and it makes sense today.
One additional factor, which is important, I'm glad you brought this up.
Yeah.
Is stable net asset value. So LAIF
Right.
has a stable net asset value, just like a money market. You
Yeah.
put $100 in, you get $100 out. The only thing in question is what interest you're going to earn. And so going into liquidity is same stable
Same.
net asset value. If we decide to go into the medium or the longer term at Cal Trust, we'll want to evaluate that pickup versus LAIF and taking on a floating net asset value
Right.
at that point,
Right.
which may or may not make sense. And so I think the idea of leaving some funds at LAIF, which according to Cal Trust is, let's say it's like steering a, huge tanker where it moves slower. And so it's moving slower, increasing yield. It'll presumably move slower.
This is Leif you're talking about now?
Right.
Yeah.
And so it'll presumably move slower, decreasing yield at a point in time. And so we may want to say, let's stay with stable net asset value just for ultimate safety, but let's put some capital, out on the yield curve
Right.
a little bit further.
So that's what I was thinking, because when I looked at it, and you made the point that, once the Fed starts cutting, the longer duration will pay off more, but we don't know when that's going to be. And given we're agnostic, should we think about spread, will we react quickly enough? Because this committee's not very agile. So, should we spread it anyway? Should we do like a ladder? Should we do a third, a third, a third? I actually think we're better off with what you've recommended, but I just wanted people to know what we're doing and talk about it.
So, part of the proposal is to try to be a little bit more responsive to how, the market changes. I think have a recommendation from Helga to Bob, Chair of the Finance Committee. I think we should make the following changes, and then we can implement these changes in between the semi-annual reviews that occur. That's a crude description of it. Is that right?
Yeah, so so I would bring to the committee twice a year at the budget, and when I bring the audit, a recommendation and a kind of review of where the investments are at. And then if there's a big shift in the interest rates, in between those times, I could go to the chair and ask his permission to make a change.
So I think the way that process would work right now is I see movements in the yield curve. We have a quick conversation with Helga, and then she goes to Bob to see whether that interim change makes sense. And it's not going to be, I don't think we should be managing this on a very active basis. It's going to be a big shift, and structurally, it's twice a year that the committee looks at that on a structural basis and makes those changes between the different funds. And it's only if things move very dramatically that there could be an interim change. And if anyone has better ideas for reviewing it, we really made that up on the fly. So if you have better ideas to do that more
Yeah.
successfully, definitely open to it.
Right. I mean, I don't think it's Helga's job to initiate.
No.
Yeah. So it should be people on this committee. And then when there's a big change, it's usually too late. And I just wonder whether we should think about spreading it over the three. You know, like,
Go ahead.
I'm not suggesting, you know,
So-
we're 100% on the shortest one. Should we think about, 80, 10, 10 or something, or not? I mean, I don't have a strong view, but we should debate it. Because we're not going to get ahead of the change, and then the change will be priced in.
So if I may, Mr. Chairman, John, I had the exact same thought.
Yeah.
And I want to say first that I would support this
Yeah,
recommendation.
I support it. I think it's a great
So
idea.
I do, and I would support this recommendation. But I did have an observation, and that is there's a financial practice or doctrine of matching assets to liabilities as well. And obviously, Silicon Valley Bank didn't do that very well. And so that's a different situation because we don't really have present liabilities, but this 8 million is not expected to be drawn at any point. So it has sort of a longer range perspective. And so looking at that from an asset standpoint and investment, and everything you said, John, was actually tracking right with my mind, that we're not going to be adjusting this quarterly or monthly, or that's not anyone's job here. But it's also interesting, if you look at the liquidity fund and the short fund, in the last number of months, the short fund has actually outperformed. And so whether that was due primarily to the softening of the, rates or flattening of the rates. And so, but if you go back further a year or so, then obviously the liquidity had responded more quickly. It's also interesting to look at LAIF over the last year or two. 18 months ago, there was $36 billion in LAIF, and today there's $21 billion. So their money's flying out. And since it does have that guarantee of dollar, it was flying out because if they're out 300 days and rates are going up, obviously the market value adjustment on their assets is suffering. And so people have been pulling money out.
I don't think it's just cyclical. I mean, people will have been putting them out, but remember,
Well, no,
remember, just
you
like
mean-
us,
So in 18 months, going from 36 billion to 21 billion is cyclical?
from the state, yes, the states haven't been they had a massive surplus and now they don't. So yes, I mean, you'd have to break it down a little
Oh.
bit, but there's a big cyclicality just in,
Yeah, but I actually
we
I
fluctuate
did a
with
quick
climate.
eyeball going back a number of years,
Right.
and it never had this kind of a decline. It held up in the
But
30.
the states yanking money out left, right and center because
Okay.
they're so short of funds, but
Um,
it's probably both.
Well, in that case, in that case, they're yanking it out at par value when in fact a true valuation of the asset would have a loss.
Right.
Any rate, we don't have that problem with these funds, and thank you for doing all the research on that, Will and Helga and probably Sally. Since they are mark to market, I believe.
Right.
So having said all that, I would support this recommendation, but I voiced the same interest in, I don't know about the moderate fund, but I think the liquidity and the short would be of interest, and whether it's 2/3 liquidity and 1/3 short, I don't know.
And the other thing to bear in mind is we just said that the amount of funds we have can fluctuate between 5 and 10 million. And so we need to bear that in mind if we're putting it into short-term and medium-term, we could be taking a hit on that. So there are just a lot of factors to bear in mind. So keeping at least the proportion of it that fluctuates in the liquidity fund might make sense, both because of the higher interest rate, but also just because we don't want to have a capital loss on anything. And we might have to pull it out, if that makes
Yeah,
sense.
no, I think that's right. So I think it's just a matter of degree. You
Yeah.
know, we're keeping some in LAIF, I'd keep the account open, but it's only 100K, right?
Correct.
And you got a choice. And I think you're right, we should keep the majority of it in the liquidity fund. So the only question for this committee would be, do you want to put some of it in the medium-term fund or not? I mean, I wouldn't go, sorry, short-term.
Yeah, the
Well,
medium,
short-
their medium is
Yeah,
short.
Yeah, medium-term, probably not, but, you know, someone looking at the committee's allocation 6 months from now may say, what the hell, didn't you go a little bit longer? I don't know. I'm not saying, you know, I'm saying like 10, 20%. No magic.
One of the thoughts I have and still concerns me is I like the old admonition, keep it simple.
Mhm.
And if I understand the proposal in front of us was that we would just be choosing between the liquidity and LAIF. Throwing in the possibility of putting some of it at a future time into the short-term or medium, to me, I worry a little bit about that. Partly for the reason that y'all brought up is this committee only meets once every 6 months, and you know, it can go one direction and the other by the time we meet. So I would need to be convinced that there's some reason to add a more complexity to what's proposed here, which was just to choose between LAIF and the liquidity. And I'm attracted also that the LAIF is a solid dollar value, so you're not facing potential ups and downs.
My understanding.
But let me, I've got a second, that's kind of a question, but my second question is that even if if this committee ultimately decides we're going between just 2 funds, but maybe between 3, it's one thing to say, well, the brightest minds on this committee will get together they'll know when to look and when to decide, which I would not want to be one of those people. But I wonder if it wouldn't make sense at this point for the committee what are those 1 or 2 people going to look at? What's the measure? I mean, in simple terms, it's short-term rates go down, long-term rates go up, but what's the benchmark that those 2 people would be looking at? Would be of interest to me. And if no one on the committee knows, we could figure out a different 2 people, maybe, I don't know.
The one thing I would say is that my understanding is that LAIF, in terms of its portfolio, most closely is a closer proxy to to Caltrust short-term fund than its liquidity fund. So we're not,
It is.
just to add that in as a.
But LAIF does have a fixed dollar value.
They
The
do.
others do not.
Yeah, I mean, LAIF invests in investment grade dollar denominated foreign government securities. I mean, it has some risk.
It's allowed to. Actually, if you look at its current portfolio, it doesn't. It's allowed to. This is a list of the assets that they're allowed to invest in. It is actually much less risk.
Because when you look at
growth.
it, you're like, whoa, that list.
Yeah.
Yeah, I would think
If
it's
you actually
more
look-
like well, to your point, it's more like the short-term Cal Trust Fund in its composition. Yeah. And you see, last bullet of the recommendation says that it will be actively managed by someone. I mean, it's not that clear. It says staff may
Yeah,
request.
but only between, well, no, I guess it does say Caltrust funds,
Yeah,
plural.
funds,
Yeah.
plural.
Mhm.
So, I mean, if you took your interpretation, you take out you say Cal Trust Liquidity Fund. And there wouldn't be any discretion. This gives the committee some discretion or, yeah. I think it's a good thing. I just think we have to debate it.
The other thing is that obviously these funds under CalTrust are managed by State Street, and I don't know how much investment advice they give as well, if we're open to them sort of flagging us when there's yield curve changes, and whether that's, given that they do this day in, day out, whether that's an approach to consider as well. I don't know whether they offer that, but
Yeah, I don't know either, but I know that, I believe when we had that call with them, that they said we can have access to them and talk to the investment advisors.
But if you're gonna do that, I mean, someone has to have the responsibility to do it. Right, it can't just be,
Right,
and I honestly don't think it should be you, Helga,
no,
because you have enough to do as it is. So,
we could establish a process whereby if we can have them flag to us when they feel like the portfolio mix that we have is maybe not optimal, to flag that, and then Will could be involved in that with Helga and then send that directly to Bob as a
Is it likely
consideration.
State Street would even be willing to do that? I mean, if they're managing all three of these funds, how likely are they to tell us what they don't tell the rest of their customers?
Because I mean, I think we can ask, they offered that during the meeting when we had the
I
Zoom with
believe
them.
so, yes.
They did?
we are an investor, so
They offered that we could have direct access to somebody from State Street, so.
Direct access is a bit different than them reaching out. I mean, if I hear what you're saying, split it between the liquidity and the short in some fashion, you would need to have some regular check-in. Just identify on, monthly or a quarterly basis, whatever this committee decides. Is that ratio still in good standing for the next period of time? I don't know that they're gonna reach out to you and tell you that. That seems, if they do, great, but I think Bob's saying that they.
So I do the quarterly investment report that I bring to council, and that's on a quarterly basis where I report the LAIF and the section 115. So I could also send that to the finance committee and report what the for the quarter and the earnings for the CalTrust would be as well, if that would be helpful.
well, accompany with that, we could trigger a call. Someone could trigger a call with State Street saying, we've got 100% in this. What's your view at the moment?
Right,
Alongside that report.
right.
That would be quarterly. But someone would be responsible for it. I mean, you would trigger it, but you'd have someone.
Right, then I could have Will and Sally maybe involved.
Yeah, like Will or Sally could be on the call with State Street
Right,
saying, what's your view at the moment? And then send an email. I don't know. I'm just trying to think through
or
how
I
you're
could
going to do it.
provide it as part of the quarterly report and
Or you
send that
scrub-
out to the committee.
Or you
the
scrub the
finance
fourth
committee.
bullet and just say it's between LAIF and liquidity fund. Then there's no active management.
Well, no, there still is. Yeah, I mean,
But there's no process. What I'm saying is there's no process for implementing the fourth bullet. He just says,
well,
we're
well,
going to think about it.
well, no, it's at some point you'd want to move some funds back into
Yeah,
the
but
lake.
what I'm trying to say is, then you want to set a process, that at least is quarterly with somebody responsible for doing it. The way this is drafted, it's just the committee might do it. I don't know, to me, I'd rather have a sort of fairly clear quarterly process with someone responsible talking to State Street. That's what I would want. But that's,
Which is a reasonable proposal.
I think Will and Sally would be great.
don't know,
I'm happy to play point on that.
15 years forecasting financial markets, I get it wrong half the time and right half the time.
exactly, that's why I think it should be you and Will.
Also,
We might be
also ask a
overthinking it.
monkey and the result would be the same.
Well,
The-
then you should just go with one fund. I mean,
Well, no, because then you've got yield curve risk
Yeah,
and you don't
right.
want it, so.
I mean-
So the difference between on the 1-year return is 5.2 versus 5.3.
now, yeah.
Yeah,
Yeah, but
And-
if the yield curve changes shape, those things are going to move big time. Like today, 14 basis points.
Yeah, but it's 1 year versus, or it's up to 1 year versus 30 days. Anyway, I'm fine with the recommendation. But I'm also fine with putting a smaller portion into the short fund.
I want to stop it because one of you just said the comparison of 5.2 to 5.3 is a 1 year between liquidity and short term. But that's returns not taking into account change in valuations, which are in the table below, where there is a pretty significant difference, 5.2 versus 4.49.
Well, I'm looking at this.
Yes, the. Which tab are you trying to
Oh,
look
I
at?
s- yeah.
Yeah, but that's comparing the Lathe. Yeah, we recognize that,
These two, right?
Yeah, it's
Yeah.
strange. These should be the same.
they should be the
They
same.
shouldn't be the same,
They should or shouldn't?
shouldn't.
Okay, so
One's effective yield, which is just yield compounded, and one's total return.
Oh,
it says total return of 5.3 on the short. And the other's yields, I'm sorry.
Yeah, that's right.
So yields at a point in time. So if we're talking about historical yields, that's as of December 31, right?
That's showing you exactly effective yield as of December 31st, 2023, a 1 year, 3 year and 5 year performance. And it's showing you effective yield in one table and it's showing you total return in the other one, because the total return includes capital changes as well.
I guess what I'm getting at is that 4.49 in the yield is what the average yield over that
It's
year?
just your no, it's just your average 1 year performance or
Yeah,
3 year
It's
performance.
what the fund actually accomplished for those 12 months.
So compounded interest payments.
So I think all we're saying is that, looking at that same chart, is if interest rates start to sag, that gap's gonna narrow or flip,
Between which and which?
5.2 and 4.5 in the lower chart.
5.2. Yeah,
Right.
Yeah.
And so I think the case for putting some into the short term is that if that happens, we're not going to be, we don't have a mechanism, as the chair says, it's going to be a drip as it happens. It's not going to happen like, oh my gosh, it just crossed the line, we're going to do it. So
I mean, yield curves the yield curve clearly is going to normalize at some point, and then the medium-term fund is going to be the one that performs the highest. Just always is. But right now we're in this weird environment, and as Will said, that could continue for a while, and so we can try and reap what we can from the short end. I'm more concerned about the fact that we're playing between 5 and 10 million, and so saying are we saying it's 50-50 percentages, or are we saying allocating a certain amount? Because we've got to pull that money out during the year from one or both of those funds. So are you saying the 5 million of that we use that's just cyclical, do we keep always that in the liquidity fund for
Yes.
safety? And then it's the other 5 million as to what you do with that, where that's our reserves effectively. That's what you can take more risk on.
yeah, or 3 if the total's 8.
Right.
Can I make a suggestion? In the policy itself, under 2.57 oversight, the second sentence, however you had written, if a significant shift in the interest rate environment, instead of that, wouldn't we be better off putting something like on a quarterly basis at a minimum in consultation with the designated finance committee, subcommittee, staff may request approval from the finance chair. That seems to give the option if things are moving in a way where you want to make a change immediately, you can do so. But at a minimum, quarterly, the place is a call to the designated committee, and then the recommendation is made to leave it as it is or change it to the finance chair.
So you're saying here to say, consider establishing policy if a significant shift in the interest rate environment occurs, or as a minimum quarterly?
I'm actually looking at the policy itself, so.
Oh, sorry.
If you go down, it's on page. The second page of the policy, the very last paragraph. 257. Second sentence reads.
Yeah.
If a significant shift in interest rates in environment occur, which is too vague to our point here, instead of that saying on a quarterly basis at a minimum, in consultation with the designated finance committee staff, finance committee subcommittee, staff, and with the rest of the sentence is fine. At that point, staff may request approval from the finance committee chair to move funds between the Cal Trust funds, plural, and or LAIF outside of semi-annual review. That says for any individual occurring event, but at a minimum on a quarterly basis, this call will happen and we'll either do nothing or we'll execute a change of the distribution.
Yeah, I like that, except aren't we going to change the word staff to 2 members of this committee?
I said in consultation with the designated finance committee subcommittee.
Ah, okay, all right.
That's wording. That's not, I don't know what the exact wording of that is, but that's the intent.
You have that?
So at a quarterly,
On a quarterly basis.
on a quarterly basis, at a minimum, staff will, sorry?
I can forward it to you. If you want specifically what I wrote, I can send it to you.
Okay, that'd be great.
And then, say we adopt that today, are we telling staff to put all of it in the short term? Or are we saying put 80% and 20% or a dollar amount?
As in, short term, as in the liquidity.
I'm
fund?
sorry.
Yeah, it's
I keep-
okay. I know what you,
Yeah.
Right, it's the-
Liquidity fund,
yeah.
yeah, which
Um,
is sort of implicit in what we're saying here. Or do we want to put some in the, whatever it's called, short term?
So before answering that, is the committee influenced by, the real-time data is the liquidity fund yield is 5.4%. And the LAIF portfolio where we are currently is like 4.04%. So there's a 1.4% difference between what we're moving to potentially and where we're moving from. And then when we've been talking about the short-term fund, that's the medium risk Cal Trust bucket. That is yielding 4.85% again versus, let's say, LAIF where we're moving from, which is 4.04%. And the question for this committee is, how should we think about the, risk of moving to a short-term floating net asset value fund to pick up that extra, 80 basis points versus staying in 2 stable net asset values and, picking up with, let's say, 80% going to liquidity fund and 20% staying back at LAIF with that 4% yield, but in a stable NAV, net asset value.
Well, we only have 100, on this, we have 100,000 in LAIF.
You're right. I think we're
that's a-
still trying to think through though,
Okay.
what
Because this is like a de minimis. I mean, that's kind of-
simply to keep the account
Right,
open.
keep that, yeah.
Yeah,
So I'm sort of ignoring it.
okay.
No, I mean, it's 100,000 out of 8 million, right? Right, what percent's that? I don't know what it is, but it's pretty low.
Tiny. Yeah.
So I agree with you. So if we, because of the relative returns on these things and the fact that, as your research shows, moving it to Cal Trust Liquidity Fund gives you more return with no increase in risk,
Mhm.
that's sort of an idiot thing to do.
Mhm.
Yeah, so I'm thinking we should do that. And then the only thing we should debate is, do we put any in the short term?
But
Cal
would-
Trust.
Cal Trust
Yeah.
short term?
So I think 100% in liquidity Cal Trust with 100K left in Leif makes a lot of sense. And then do you want to go another step and say, put some in the short term Cal Trust, simply because in the next 3 months, you know, the yield curve can move significantly and you'd pick up something and you could also lose something. So,
And I think the thing to bear in mind there is that we've got about 5 million that's completely stable that we're never going to need unless there's some kind of exogenous shock, and that's the whole point of the reserve. So I think we
Right.
should take a little bit of risk with that, meaning to earn a little bit of extra yield, even with some potential short-term risk of capital depreciation, is probably worth it from a risk-reward perspective. It's not like we're gambling into, you know, any equities or whatever else,
Yeah.
mortgage-backed securities, anything. It's all pretty stable.
right.
So
That would be-
that would
that-
argue for some exposure to the
Yeah.
short term
Yeah.
Cal Trust.
And eventually, maybe even the medium-term fund if the yield curve completely normalizes.
Yeah.
I mean, that's only my opinion. I mean, you may want, generally government funds should be managed very securely, but all of these investments meet all of the government code just by requirement. So we're not doing anything outside of what's regularly done by every city.
So I think it's make your mind up, Tom. I think people have just got to make their mind up.
Go for it, John.
Well, we said now we're gonna review it quarterly, essentially. So then the question is, do we think that in the next quarter, we're gonna make more money in the short-term fund and therefore put a portion of it there? The delta seemed to be pretty high still, right? You said 5.4 versus
5.4 versus, you know,
That's up to date, is it?
yeah,
Because it's not what's in this paper,
No, but the yield
this
curve
this is
today
off
is-
the website.
off the website today. Yeah. I mean, you could do it this way, right? You could say, let's put 100% in a liquidity fund. Because, you know, we're a conservative panel and we'll move it into that. And then the next quarter, we'll have a look at it. If you look at the market's pricing no move in the next meeting by the Fed, much lower in March, and then the pricing in June as the move. But of course, if it becomes more apparent, these things will reprice before the Fed has its meeting. But I mean, a conservative approach would be just to move it into the liquidity fund, net of the 100, and then at the next quarterly meeting, revisit it and see what we want to do. Or you put like I don't know, $1 million in the short term. That would be 20% of the 5 million that Sally's talking about. I think people are leaning towards putting it in the liquidity fund. Because it's an improvement over what we've got now. So. What do you think, Will? Because you're going to be making the decision in the end.
Let's put it all on Will.
Yeah, we'll put it in the minutes.
We'll recognize as mentioned that it's a starting point.
Yeah.
Yeah.
Nothing more than that.
I think my inclination would be, let's do the plan of, you know, leave 100K at Leif, put the rest in liquidity. Personally, I think we're getting the most yield there, and we're also staying the exact same in terms of stable net asset value. And then I think we can, you know, lengthen out maturity. And I would equally consider at that point the medium term, you know, just to push out maturity a little bit and have a barbelled approach.
Yeah.
So I'm comfortable doing, you know, the dollars as we had planned, and then we'll revisit it in 3 months.
I would support that.
Okay. Me too.
Everybody nodding their heads, yes. Somebody has some wording to give Helga.
I said it too.
Okay, great.
But yours didn't explicitly say 100 in Leif and everything into liquidity right now, though, did it?
But that's in the resolution already, isn't it? The recommendation
Yeah.
to maintain the 100K for the rest of the liquidity fund. I
So
believe
that-
that's the second bullet point.
Those are the two
Yeah.
recommendations.
first one is-
two
yeah.
recommendations.
It's totally consistent, except for the fourth bullet would probably be reworded along the lines that you've said.
And are we going to establish that Will is the designee on the finance committee to have those quarterly calls?
So it was you and Will.
Fine.
Yeah.
Yes.
So
Helga, do you have wording for us to vote on?
So then the recommendation would be to move, to maintain 100,000 in late, to keep the account in good standing, and to transfer the remaining balance from LAIF to the CalTrust Liquidity Fund, and then to change the investment policy of reassessing the fund allocation on a semi-annual basis, with staff bringing the recommendation to the Finance Committee at that time of its budget and semi-audit meetings, and then Peter.
And then in addition, on a quarterly basis, at a minimum, in consultation with the designated finance committee members, staff may request approval from the finance committee chair to move funds between the CalTrust funds and or LAIF outside of the semi-annual reviews. So it's as amended in your staff report, with the exception of on a quarterly basis at a minimum, in consultation with designated finance committee members.
Correct.
Would someone like to make that motion?
Yeah, move that motion.
Second?
Second.
Roll
Again,
call?
no public comment on this issue, I'm assuming. Nothing online, at least.
Okay.
Thank God for that. Oops, sorry, public.
So Chair McCaskill,
Yes.
John Wilton,
Yes.
David Walker,
Aye.
Patrick Fader, Will Lyon.
Yes.
That passes unanimously.
Which I believe concludes our business today. If there's no other items that the committee wishes to raise.
I have one just question that's old business from the last minutes of December, where we were going to get a report back at some time, and maybe it's not ready, on the levy insurance.
Yeah, I can comment on that. It is not ready yet. So still working with them. It sounds like the next steps are going to be getting appraisal of our existing levy. That will, I suppose, inform them on what level of insurance is needed and obviously the rate. So we're working on that. Do our best to bring it back the next time we meet.
Robert, would it be helpful for this committee? I think Peter and Sally probably know the details, but the rest of us may not. It's my understanding that we're close to getting a grant for the levy work,
So
or not.
we did apply for a grant in 2021, the BRIC application grant through FEMA. Still pending. They've said it's a maybe, but we've yet to see a yes or a no. So I'd love to be able to say yes or a no. I just don't have information at this point.
Okay.
It's possible.
It's in the final stages, but it's possible. One thing I wanted to just note, and it's not for today, but we were approached by Tiburon Open Space to Belvedere to possibly consider giving funds to support them being able to close on Martha's property, because as of today, they haven't raised enough funds to be able to close on that property by the deadline. And what we said is that they should bring a request through our finance committee rather than take it to city council, because the finance committee would have to consider that within the scope of next year's budget. So that's all that we know right now. So I think when we bring the budget in the spring, that may include at the same time a request from the open space committee and a few million. Yeah.
And what do they have to the middle of this year, or?
They've got an option through until, I don't remember, some mid-year sometime, I think it is. Yeah, and it was a big gap. So they've done some very aggressive fundraising, I think the counties agreed to kick in Tiburon's maybe kicking in, but it's a relatively, at least the initial number that we heard is big for us. So we just don't know what they're finally going to ask of us. And so it has to be within the context of what we can afford within our budget. Not by June, not by when the option expires, no. So we don't, I think they're still trying to do as much as they can in terms of fundraising to see whether they don't have to make that ask. But that will come, we ask that to come through the finance committee because obviously it's within the scope of what we can or cannot afford.
Okay. If there are no other items, we're adjourned. Thank you, everyone.
Thank you.